Good afternoon and welcome to Tuesday's MyStockScanner Live. The Manic Monday is behind us. Now let's see which stocks are starting to show direction. We have a 3-point playbook portfolio, Hans-Henrik, and that sits as minus 1.7. We had a bit of a hectic day yesterday. That's no secret. We had 4 sales in the morning, and probably 4 sales we should have done had we been able to look into the future, because Trump flipped it on its head, didn't he?
Oh yes, definitely. He came out with that announcement about negotiations with Iran that Iran then denied, but that definitely sent the oil down and the stocks up, and we had a perfect crystal ball to see the future in, we would not have sold, but that's how it is.
Yeah, we just follow our rules, and well, in the long run, we're happy about it because that's how the only way you can play it, as you're not privy to see what goes on in Trump's head, if anything at all. But Liam, if we take a look at the UK exchange, the FTSE 100, the thing is, I've noticed that ever since the Brexit, it has a life of its own in that sense. It doesn't follow mainland. We'll have days where it's green in mainland Europe and it's red in the UK. Are you that Brexit away from us that you just have a life on your own on that?
That was one of the things we agreed to, that we wouldn't have anything to do with the horrible foreigners we just got rid of. No, it's actually the UK tends to be a lot more defensive, so it's got a lot more older mining stocks, a lot of defensive stocks like Diageo and companies like that. So and I think 70 to 80% of the whole index, the earnings actually come from outside the UK, which is a damn good thing because we're not earning much money over here at the moment. So it's good to get it from somewhere else.
So you almost say it's a hedge on Europe to be on the British exchange.
It's a hedge on Europe. It's also a hedge against the US dollar because the sterling is obviously so well liked still for some reason or other, that a lot of people will trust the fact that our government over here won't actually go and inflate it away. They're idiots if they do that because they're probably the worst ones I can think of. But there you go. That's a hedge as well.
I'm sorry that we sort of took a D route here in regards to the macroeconomics, but welcome to MyStockScanner Live on a Tuesday, where the focus is on what actually moved the markets. But geopolitics, of course, are still in the driver's seat. Trump delays strike on Iran after he had very good talks with somebody in Iran. Or did he? That's the big question. At the same time, Saudi Arabia and UAE could be stepping in, at least according to a Wall Street Journal post. We see oil hovering about $100 when it comes to Brent. Meanwhile, gold and silver is struggling to find a direction. And as we come to the 3-point playbook, we are going to look closer at a case that we were going to look at yesterday, Norsk Hydro, not because it's a stock that did us any good, but what was the reason we went into it and what was the reason we came out of it. And since we are in Scandinavia, also going to look at B&O, Bang & Olufsen, because they cut their guidance. And then we have a big news in the beauty industry. So glad that we have a beauty expert, who, by the way, is also the tech expert, Liam Flavelle, with us today. So we got a busy show for you guys, and we have number of the day, $13 billion. But let's start in Denmark, Hans-Henrik, because I have sort of a general questions in regard to the election. We had the general election today. Is that anything that sort of have an influence on the market? Is it something that we can see move the market?
Nope. There's absolutely no evidence in history to provide any proof of that. The only thing I could think of that would move the market is if the absolute most left-wing communists wannabes, if they won 90 votes in the Congress in Denmark on the parliament, then they would do something with the taxation on stock gains. But no, absolutely nothing.
Okay. All the communists are quite busy over here on our government, so I don't think they've got time for you.
Okay. Yeah.
Okay, it's a coincidence that Hans-Henrik is wearing blue. I can say that right away. But let's move our attention to this side of the Atlantic Ocean to go to Washington, D.C. Trump on the phone here. I think he forgot to plug it in, but he's, as a matter of fact, talking to Iran. or what, Hans-Henrik? Because the rumors is that Iran says, yeah, we didn't talk to him. So who did he talk to?
Yeah, I'm not sure he talked to anyone, because in his statement he said USA have talked to Iran this weekend. So we don't know who it is. There are rumors that Jared Kushner and that Witkoff guy have talked to someone, but it's not the top in Iran. And Iran says, yeah, well, we can talk if you lift all sanctions and pay for the damage you have done. And I don't know, maybe they're going for a regime change in US, who knows? But basically they are demanding stuff that US could never agree to. So I doubt that there's anything. Trump, he bought himself some time. And this next deadline, this ultimatum, runs out in the night between the Friday and Saturday this week. And if you have heard our show before, you know what we think normally happens there.
Yeah, that's when he does his big moves, because then the market has time to price it in. But Liam,
it was confusing.
It was very confusing yesterday. And Liam, if we take a look at both, if we take oil and the precious metals and kind of turn them into a big whammy here, it seems like everything has a problem finding its direction. Oil, the 1 minute it's up, then it drops down again. Now we're inching up again. Is this just the uncertainty that we live in right now?
Yeah, oil is going to be heavily dependent on the news for the next probably 6 to 9 months, I would guess, on the way we're going at the moment. I read an interview with United Airlines CEO this morning where their worst case scenario, which is what they're basing everything on at the moment, is $175 oil for most of this year, and it doesn't come below $100 next year. So until the end of next year, actually. So that's their baseline scenario, and they're cutting 5% of their routes because of it. So, if you look at oil, then it's sort of acting. It doesn't know where to go, because when Trump says something fantastic, it shoots up, then it shoots back down again, etc., etc. So very difficult with the oil to work out where it's going to go. Obviously, this is the American light oil futures. You've also got the Brent crude in the UK, which has got a bit more of a spread on it, a bit higher value to it. On gold, we're well below $5,000 now. We came out of our gold producers somewhere around here because they popped down below the 50-day SMA about the same time. Everyone's needing liquidity right now, so they're running out of trades. Also, with the massive run up in gold and also in silver, it's priced for perfection. So everyone's saying, let's take some profits off the table so we de-risk ourselves.
One thing that we talked about yesterday, and you might iterate on it today, is that it looks like gold might bounce on the 200-day moving average, which means that it behaves like a stock.
It's about psychology when you look at technical analysis type work like this. People and human beings like to see patterns in things, and when a lot of people will look at it and say, okay, that's a bounce, we'll take it from there. Whether that's true or not, you've got Fibonacci numbers, you've got Gann waves and things like that, Elliott waves that I know Hans reads every day what the Gann waves are doing. But there's a lot of these sort of theories. We look at the 50-day and 200-day because they tend to be the ones that are followed most out there. They're the simplest ones to look at. You look at a chart, has it come up from there? Has it got support? So support and resistance works, and the Gann waves and the Elliott waves, there is something behind there, but basing your whole premise of trading on it sometimes can be a bit difficult to swallow.
Yeah. I'm so glad we have the stock cat Wilma doing our things, but rather that than tea leaves. But let's open the 3-point playbook portfolio, Hans-Henrik, and hear from the oracle from Viborg in regards to a Norwegian stock that we went into. We had it super briefly, and I know that a lot of our viewers and members kind of want to know why did we go into it and why did we step out of it in a hurry.
Yeah. And also we want to know in the middle why the hell it dropped. Because
it's I should say that oracle from Viborg, he couldn't make it today, but I'll fill in. First of all, Norsk Hydro is let me just see, Liam stole my screen, I think. Or was it there in the first place? There it is. Norsk Hydro is a good quality stock. They are producing aluminium, and there is 12% of world's aluminium locked in the Hormuz Strait right now. So that was one of the reasons. However, aluminium is using a lot of electricity, so it's a good thing that Norsk Hydro, kind of in the name Hydro, they are I think the third largest producer of hydro power in Europe, I think it is. So they have a lot of quote unquote free electricity, or they have their own power plant. So that was kind of the rationale, the logic behind it. Good quality, earnings per share going up, revenue going up. It's a quality company. You could say the return on capital employed have dropped somewhat, but free cash flow is good. They can pay the interest on the debt and so on. So the first point in our 3-point playbook, yeah, it's a good quality company. The potential were absolutely there. We were setting it to price earnings at 16, 20, and 24, and with the estimated earnings, that would be a massive upside. So it seemed like a no-brainer. Until stuff happened. We're not sure exactly what, because we don't think it makes any sense. But what basically happened is, as you can see here, it has been in a good trend, and had we been a little bit more brighter than we actually are, we would have picked it earlier on. But we picked it somewhere up here, and then it turned around and went straight through the 50-day SMA up here. What happened then, and this is a good example, we didn't sell on day one and just say, oh no, it broke, so let's get out. We never trade in panic. So we just gave it a bit of wiggling room, and it went a bit up, and then it went down the next day. And then yesterday it dropped. And as you can see here, I think we can pretty much spot where we sold and where Trump started posting, because it turned around basically just after we had sold, and that is annoying. But today, I'm not even sure if it's a bit down again. I think it is.
Today, yeah.
Yeah, we should never judge this on just one day. You can see here. So we are absolutely happy with the sale from a rules-based point, but we can still be annoyed that Trump can move the market around like that. I am still really thrilled about the stock. So if it comes up here and start proving a new uptrend, I would not mind buying it again.
But the other reason also that we went out of it was because the gap to the 200 days was just too big.
Yeah, exactly. And because normally, had the 200-day moving average, let's say the black line here, had that been around here, we would have given until the break of 200 when it's only 2 or 3 or 4% away. But this one, I think, was something like 13, 14, 15% away. And that is simply too much to give. We normally get out of our stocks. We can see that here in our stats, in our portfolio. Our average loser is 6.5%. That is the reason why we are up 32% since the beginning of January last year, and the market is at what, 1.1, something like that here.
Yeah. Let's leave Norsk Hydro behind. As we said, we're never ever afraid to go back into a stock if it makes sense later on. Just because we sold it, it's not like we, sorry to say, hate it. A stock that we have a lot of hesitancy towards is Supermicro. And the reason why we bring it up is because a lot of Danes had it in their portfolio. I think some still do. And basically, if we're talking about a head spinner, Liam, in the Tech Tuesday here, Supermicro, in that sense, 33% down on Friday. There's a reason for it. Then it bounced 5% yesterday. What is going on?
What is going on? Yeah, that's a very good question. What's been going on for a long time, actually. If I just show you the chart. This is the last year or so. So from the peak of February last year, the stock is down 67% now as of today, as of this morning. But what happened was the 3 of the top executives within SMCI, they're a big company that provides server capacity and servers and racks and networking kit into the AI industry generally, and the data center industry generally. The 3 executives got charged with I think it's charged or called up with smuggling NVIDIA chips into China, which is not allowed. It's illegal, and the US are desperately trying to stop the Chinese from getting an edge using the NVIDIA chips for training. because they're the best out there. So that's what happened yesterday. The three guys got indicted. To be honest, this isn't the first time. You had this big drop over here because of an accounting scandal, this drop over here because of another accounting scandal. You had a big drop. I think this big drop was probably an accounting scandal. I can't remember on that one. You had another one back in 2018 where the company was actually lying about its accounts and had to restate them. So SMCI have a checkered history. Having said that, go on.
No, because I want to bring the 3-point playbook up.
Yeah.
Because then we look at it, it looks fantastic.
It's a brilliant stock.
Can we trust it?
No, not at all. But can you trust any of these guys? When you've got Goldman Sachs a month ago saying that out of the $450 billion spent on AI last year by the big hyperscalers, 0% was the benefit to the economy, then you can't trust these sort of things. But there is money flowing into the accounts and the company, and that's one of the arguments against selling off at the moment of SMCI. People are saying they are so important to the whole provision of data center for AI, and it's such a big booming area where the big guys are spending $700 billion this year. So why throw everything out and just have a bit of a huff about it and say no, we're not going to buy them out of principle? In that case, you probably wouldn't buy any stock out there.
But hand on heart, Liam, would you buy it today?
Well, no, this one for me is a bit like Adobe because I got caught about 30% down. I think it was a couple of years ago. So I hate them, and I think they should rot in jail personally. But that's very personal.
If I may add here, normally we don't buy stocks where there is a special event, like something that we can't put a stat on. We cannot look at the stock here, Supermicro Computer, and say, well, you almost can, but what happened the last 10 times something went terribly wrong in this company? You can almost do that with Supermicro Computer, but normally fraud, CEO fired, the CrowdStrike when they got the world to shut down everything. We cannot really account for that, and therefore we don't buy.
Yeah. So we don't like taking that risk on. However, a lot of people are arguing that with these two golden bars showing so much upside, and also the value chart. You look down here, it's bouncing on where it bounced or where it started going out 2023, where it bounced in the scandal in 2024, bounced there. There was another accounting scandal there, which wasn't too bad. Even in the worst case scenario, and I've massively reduced down the earnings potential here, and also the PE ratio down to 10, which is crazy because the stock is a lot higher than that. It still gives you a 15% return. So actually, if your risk tolerance is slightly different from ours, 16% isn't too bad.
I'm glad that I'm not dealing with the tech industry all the time like you do, Liam, but I know that you have other news for us in regards to Broadcom, because Broadcom, if I'm not going to say that we stay in the mud lane here, but Broadcom is out saying that they see TSM as a bottleneck, and maybe not. It's not just because of production.
I suspect there's a different reason for them. They're turning around and saying that TSM Taiwan Semiconductors are the company that produces 60, 70, 80% of the most advanced chips in the world. So all the NVIDIA chips that generally get produced by TSM. Broadcom are a designer of chips with other people, and they throw their designs to TSM to fulfill, or TSM most of the time. There are others out there like Samsung, but TSM are the big guys. Now, I know that NVIDIA have cornered about 90% of the most advanced production capacity for the next 2 years from TSM. And I think that's more what Broadcom is saying at the moment. They're saying we can't get capacity to actually be fulfilled by TSM, so we're having a problem. So I sort of foresee that, again, we're coming back to these golden bars are basically, this is the earnings per share last year, and this is the earnings per share that the analysts think in the next 2 years, and they're shooting up. So normally we absolutely love that. But now I'm looking at it thinking, what happens if the analysts are wrong here? How do we, can we model that? And from a 3-point playbook point of view, the stock is absolutely fantastic. Everything is green, free cash flow is going up, etc., because they're partnered. They're some of the best manufacturers in the world. But in the worst case scenario, if we just unsync those, if we just bring this down to 14 and down to 10 because they can't get the capacity and maybe the PE drops a bit, then all of a sudden that comes down a bit. They're still a good buy, but it's, you've got to load that risk into the equation here when you look at the bear case to say, okay, what happens if they really can't get any chips? They can't sell them, so their earnings are at risk.
Liam goes to depth in regards to the tech industry. He does that every Tuesday, every Thursday, and that's why he's also broadcasting here at 1 o'clock in the afternoon. But he also brings up his articles, and you can read them on our platform. If you're not a member, take a month free membership and do read the very interesting and in-depth words from Liam in regards to the tech industry. From I'm almost going to say Taiwan back to Denmark. We are going to stay within tech, but a different kind of tech. This is sound tech, so to say, and more over in the design side of things. Hans-Henrik, numbers from Bang & Olufsen, not impressive. They fired the CEO back in January. Of course, that can't flip the company around in March, but disappointment all around today.
It is. It's the first stock I ever bought back in 1987, so it is a bit nostalgic. They have struggled with making money, and these estimates that they are going to make money in 27, they have estimated that many times before. The analysts thought they could up their earnings per share. It seems like they were wrong. Free cash flow have been terrible. We cannot make anything out of this since they're not making money. What we can do is we can look at the chart and say, when would we have been in this? Had it been a good quality stock, we might have entered it here, but then we would have been out somewhere in this mess here. So we would definitely not have taken the entire way down. Where should it go from here? Well, to be honest, I'm a fan of their design, especially back in the days. Today, I feel like they're trying to sit on two different chairs, one design and one sound. And well, not an expert here, but I wouldn't own the stock.
See, the thing is that you almost ventured into saying beautiful design. And since we are in the beauty industry, I'm glad our expert is around today and talk about it. Because Liam, Estée Lauder is in talk to buy Spain's Pew brands. And when I look at the stock market, yesterday, Estée Lauder in the American market went down by 7.7%. Pew brands went up by 16.25% at one point today on the Spanish exchange. Sounds like the better end of the deal on Pew.
Oh, definitely. So yeah, the price they went up. Any of these companies, the company that's being bought generally shoots up to around the price they're going to be bought at, and the other companies go down because generally these deals are just managed with debt. So with Estée Lauder, they're looking at, I mean, we looked at 12 billion. I've also seen 20 billion in debt talked about, about $12 billion in there. So they're looking at bringing on 12 billion in debt, and they only have about 3.7 billion in cash in the system. My glamorous assistant is just showing us here on the platform where it is. So they've not got an awful lot to play with in here. They've got working capital, but they've got the cash reserves there as well. So that's where Estée Lauder are going to have a problem. But I think generally there's a bit of a cash crunch in the industry at the moment. You look at private equity, you look at the private credit markets, and you've got big companies like Blackstone. You've got lots of private credit companies that are starting to stop redemptions, which means investors can't pull much of their money out at any one time. That's causing a problem. The top of the market could be shown by OpenAI, the company that owns runs ChatGPT. They actually are putting out a bond at the moment at 17.5% guaranteed income for a joint venture they're trying to get together, and that sort of thing tends to be quite toppy. These are the events where you look back and you think, yeah, that was the top of the market. That's the straw that broke the camel's back. So maybe that will happen here.
Yeah, but one of the things I know that both of you guys think is that when people get an offer like this, you often, if you were holding Pew brands, you were selling today, because from here on out, it's basically just, I won't say evaporating, but it seems like it's sliding.
Well, there's no upside after here, because if that's the price that Estée Lauder are going to buy at, then either the deal goes through and you can take your money now, you'll get virtually the same money as if when they close the deal in a few months, or the deal falls apart and the stock goes back down again. Which one do you want?
There could be if there was a competitor, but there isn't really. Like with the Paramount Netflix thing, Warner Brothers, where they're bidding each other up, but there's no obvious one to bid against them here.
But I remember back we had a company that produced plastic wrapping and stuff like that. And on the day that the bid came, you sold right away and
Still
walked away
there.
from it.
Yeah, exactly.
We are gonna look at our Tuesday poll because it is Tuesday, and last Tuesday we asked our members and also people on our Facebook pages in regards to oil stocks, which stocks they believed had an upside. Members came out and say Equinor 28%, Exxon 22%, Stock Chat for Everyone said Chevron 50%, Axisnack for all said Equinor and Shell as their two favorites. Now we have a tricky one this week. We're going to keep it Danish because we have a Danish election. So why not do a Danish election in regards to the C25 stocks? We're going to ask, where is the C25 index going to stand May 1st? Today it's at 1645. We're going to give you options, but then we want you to give us your most positive stock in the C25 and our biggest loser. Which one do you think over the next month and a half will slide? Give us your thoughts on our platforms on Facebook. Liam, Hans-Henrik were positive on Maersk and a little bit on Novo. I'm interested to hear your take. C25, favorite stock. Which one is your fave? Which one is the loser?
He doesn't know any Danish stocks.
He does. He could go for
Heard of
Carlsberg.
some. Yeah, I mean, I'm personally trying to keep Carlsberg up and Royal Unibrew, but yeah, it doesn't seem to be working at the moment, does it? We did make some money out of Royal Unibrew. I think we made some money recently on them. The biggest Novo, unfortunately, is under a massive amount of pressure. For me, that's the problem child of the whole lot, and that obviously underpins your economy as well. So that's an issue, especially with the Indian generics coming out that $14 or so for a shot of Wegovy rather than the $150 you can buy it for. That's a problem.
Yeah, I'll give you one that unfortunately is not a stock because it's number of the day. $13 billion is the Lego sales in 2025. It's up from 11 billion last year. That grew 13% from 23 to 24. It's just an endless success story. Hans-Henrik claims that he basically paid for half of the company by gifts to his kids. I don't know. Is your kids a Lego generation as well?
Yes, less. Not for a while. They're all quite grown up now. Whereas yours are mere children, aren't they? But yeah, over time we've definitely sort of bought an awful lot, and I've stood on an awful lot of the bloody things as well in the dark. So not happy about our company.
That's a whole different pain level than anything in the world. But we're going to bring up some numbers over the week here because I got hold of some interesting numbers in regards to sales of Lego to adults. So that would be number of today at one point this week. We're coming to the end of the show. We overran a little bit, but we have so many things that we want to tell you. Liam, of course, is going to put out the Tuesday Tech article. It's going to be available on the platform. Go check us out at MyStockScanner.com. Sign up for the free month membership that you get there, and you get the insights of everything. Later in the week, he will be back on Thursday at 1 o'clock, and Thursday Tech, of course, on that time. So there will be much more from Liam in regards to that side of business, and who knows, maybe even more beauty tips for you. It's an interesting world we live in.
I'm going to focus on.
Yeah, but that seems a little late for you. I'm sorry. But anyhow, we're going to be back with the Danish show tomorrow at noon. For now, go vote in Denmark. The general election is on. Do your duty. Be part of democracy. So go vote, and happy investing out there. Guys, I'll see you around. Cheers.